The studies done during the pandemic on ivermectin were fraudulent. There was a lot of fraudulent papers submitted to try to prove that it was deadly. So there was just a abject fraud in the scientific community going on.
What's the number or the data set that's most alarming to you?
The disability numbers are just staggering, and they really show a tight correlation to vaccine rollout and a rise in disabilities. And the young people are still dying excessively, around 20%.
Welcome to the Porter & Company Black Label Podcast, your home for provocative insights that lead to lasting wealth. And here are your hosts, Porter Stansberry and Aaron Brabham.
All right, Porter, here we are back again for another Black Label show. And, of course, I've got Porter. Porter, I'd like to know your thoughts on coming back from my wedding. And what did you think about Colombia for the first? You've been in Medellin, but what did you think about Cartagena, and what did you think about that hotel?
Well, listen, your wedding was beautiful. Everyone was so kind, and the hotel was one of the very finest I've been to in the world. And Cartagena was a lovely little town, so I had a great time. And I'd recommend it to anybody who's going to be in South America to definitely check out Colombia. I love Medellin, and I really liked Cartagena too. But listen, before we get into things here, I just want to say our Black Label shows haven't been very Black Label-y lately. Right?
It was because we got into too much trouble. We cost you $1 billion.
Nobody's drinking any gin. Nobody's getting a little loose. It's been very professional. We need
we cost you $1 billion, Porter. That's why.
We got canceled. It was very expensive. But I still think we need a little bit of Black Label-y stuff. We need to talk about the seedy underside of the financial world and all the shenanigans that are going on. I mean, it's Davos this week.
Yeah, Davos and the Bilderbergs and all those meetings, they're not looking so bullish these days, which might be bullish for humanity. Who knows?
I don't know. I think that's progress. But the other thing that I'm so fascinated by right now is the people actually cheering for more taxes.
Yeah. We'll get into that later with our interview, and let me go ahead and give the shout out. So today's guest is none other than Edward Dowd. He's the founding partner of Phinance Technologies and author of Cause Unknown: The Epidemic of Sudden Deaths in 2021 and 2022. He also used to work at BlackRock as a portfolio manager, managing $14 billion. That was over 13 years ago. But I'm excited to have him on.
I want to go ahead and get to that interview with Ed because he's an incredible guest for us to get. Thanks for doing that work. And I also just want to summarize for people. Ed was the leading intellectual who was first out of the gate, the very first person to publicly discount what the government was saying about COVID. And then he was the first person anywhere to carefully document the incredible rise in excess death and in injuries because of, we suspect, the COVID vaccine. So why don't we go ahead and bring Ed in, because I know he's going to have an opinion about whether or not tariffs or taxes and whether or not it's a good idea to set up another agency of the federal government to collect still more taxes. I mean tariffs, but they're the same thing, people. You got to understand.
Yeah, for sure. All right, let's bring him on. All right, Porter. Hey, I've been talking about Edward Dowd for a long time, and I know you've known of him for a long time as well. You guys have a ton in common because Ed actually used to have his pinned post on X about a dystopian movie, and I believe Ed originally wrote about that in March when the pandemic got started. And Porter, you wrote a famous piece in April. So you guys were very early and on it, and I want to welcome Ed to the show.
Yeah, I do too, Ed. It's a tremendous honor to meet you and to get to speak with you. I've been following your work for years. Like Aaron mentions, I was an enormous COVID skeptic from the very beginning, just based on the data that I saw coming out of that cruise ship where the infection had run rampant, the Navy ship where the infection had run rampant, and then all the wastewater testing that was going on in Europe where you had real case mortality versus population mortality numbers, and you could see that it wasn't much more dangerous than the flu, and that everything was being grossly exaggerated, probably for political reasons. But listen, you're the expert in all this, so I'm going to shut the heck up and ask you, when did it first occur to you that what you were watching was science gone completely mad?
Well, I was early to know about COVID because, a lot of us on Wall Street, we pride ourselves on getting information early. So I was living on Maui, still live on Maui. And in January of 2020, before the public was aware, I went to Costco and I loaded up before the rush, about a month before. Then the public was made aware of it. And so I was scared early, but then, like yourself, quickly turned on a dime when I realized that this was not a dangerous virus. The other thing that occurred to me was in October, November, and December on Maui in 2019, there was a bug, quote unquote, bug going around, and it was COVID. And people were getting laid out, but there were no deaths. It was a nasty virus, and people were floored by it, but no one was in fear because they weren't told to be in fear. And then a switch turned on, and then the fear propaganda came. So I was very suspicious then. And then early on, I saw censorship. Zero Hedge was censored for saying there might have been gain of function in January or I think February or March of 2020. They wrote a famous article about some university in India that said that it looked like it was a manufactured virus. That was immediately censored. So censorship immediately alarmed me. And then as time rolled on, you could tell, and I wrote in my famous dystopian future tweet, it seemed to me that they were going to go for a vaccine. And as a financial guy, the big warning sign for me was in April of 2020, when on a Sunday at Meet the Press, James Bullard, former St. Louis Fed president, is talking about how we're going to restart the economy. And he said, the good news is we have new surveillance systems and we can issue immunity badges. So I started thinking to myself, why is a Fed president talking about what's going on? And then they memory hold that because it was early before vaccines. A lot of us on Twitter at the time pointed out how absurd that was. And then they stopped talking about it. And I remember saying vaccines are coming. That's the solution. And people thought they called me a conspiracy theorist. And then sure enough, a vaccine was the solution. In hindsight, we learned they were suppressing early treatment protocols like ivermectin, hydroxychloroquine. And it was all about lockdown and wait for the vaccine solution. So something, and then, you probably saw what I saw in 2020. The messaging from global governments was all the same. And I said to myself, being an analyst and Wall Street guy, when has the global government messaging ever been in unison? Never. So I just knew something was different. Something was going on that seemed sketchy. And, you and I in the finance world, ever since the great financial crisis, have been blowing a bubble. And we've been wondering when there's going to be a sovereign debt crisis. And in the fall of 2019, there was the beginnings of a coordinated global slowdown. There were repo markets going crazy. And it seemed to me that the whole thing was going to unwind. But then COVID came, and then we printed unprecedented amounts of federal debt money for COVID. And COVID was a war. COVID was warlike spending. And so it kind of, whether it was a planned event or lucky happenstance for central bankers, it gave them an excuse to kick the can down the road. And here we are 4 years later. And my team and I put out a report about a week and a half ago that's it's a paid product. We're predicting a deep worldwide recession beginning sometime in 25. It's just baked into the cake.
I want to get to the financial implications of kicking the can down the road in a minute. I have a couple of science questions first before we get to the financial things. And like I said, I'm very grateful to get to talk with you. I think you've probably done more work on these particular topics from an independent standpoint than anybody else. And we've all learned what happens when you trust the science. So I'm glad to talk to someone who's in finance and isn't wearing a lab coat, because I feel like I'm going to get a much more honest answer. But a simple question for you, which is, why even now, we are how many years away from all of this, why is there still a question in the scientific community about whether or not ivermectin works?
That befuddles me. I take ivermectin myself whenever I feel a little something coming on. Look, in 2016, there were glowing articles about it. I think it won the Nobel Prize, and then it was demonized as horse paste. So it clearly, as time rolls on, more and more scientists are pointing to the fact that the studies done during the pandemic on ivermectin were fraudulent. There was a lot of fraudulent papers submitted to try to prove that it was deadly. So there was just a abject fraud in the scientific community going on. The peer review process, as we know, is a joke. Some of the papers we've written, we put on ResearchGate. We're not asking for peer review because we know it's rigged, but if everything was normal, some of the work we've done on, excess deaths and excess cancers and heart attacks and neurological problems could be submitted for peer review, but what's the point? But we put it on ResearchGate so the scientific community can cite our papers.
Well, let's get to that next point. You've done lots of different research and you've come up with lots of different real numbers. What's the number or the data set that's most alarming to you?
Yeah, so, we like to look at data sets where there's lots and lots of population. And my colleagues, Carlos and Yuri, we think the best data set that proves the case is the disabilities. Although everybody loves to talk about excess deaths because it's hyperbolic, the disability numbers are just staggering. And they really show a tight correlation to vaccine rollout and a rise in disabilities. We got we get the BLS showing the numbers in the US. It's not granular. And then we have the UK Personal Independent Payment System, PIP, they call it, that goes more granular. It all started exploding in 2021. And the numbers are pretty stark. And the correlations are just tight.
Sort of off topic, but a question I have. I'm interested in the demographics, particularly in Russia. I have an instinct that living in a country where there isn't a history of the rule of law, where there's rampant alcoholism, where there's a declining birth rate, and where there's been a very large land war in Asia, is going to be surprisingly bad for the demographics. Have you seen anything in your research that suggests that the injuries and the excess death rates from the COVID shots are materially different in different populations or materially different from different types of vaccines that were used?
Well, we did look at Russia. We don't have the demographic data, but we've looked at all sorts of different countries. In the U.S. in particular, excess mortality, while down from its height of 40% in 2021 for ages 16 to 64, it's running between 5 and 10% right now. And the young people are still dying excessively, around 20%. So that's a problem. Scott Davison of One America famously said in January of 22 on a Chamber of Commerce call that a 10% excess death rate is once in a 200-year flood. 40% was off the charts. So now we're coming down from off the charts to once in a 200-year flood consistently. So, and we haven't looked at fertility yet because fertility is noisy. Deaths are easy to predict. Death rates are stable and steady. So it's easy to get a baseline, and then you can get statistical signals. And fertility, it's affected by economics. So you need persistency of down fertility rates before you can make a call. So as we go through time, if the persistency of fertility continues to decline and stay low, then we got the twin problem of low fertility, excess deaths, which demographically is a disaster. The good and bad news is the U.S. Is probably the best country out of China, Europe, and Japan and Korea, the major Western economies, because we imported 10 to 15 million illegal aliens to kind of cover up some of the excess deaths we've been seeing here in the U.S. China has a big problem. They hit a demographic wall in 2020, and you've seen what's going on with their economy. Japan is entering another demographic death wave. It's going to accelerate. South Korea is terminal. So we have, and then of course Southern Europe is a disaster. So we got demographic problems all over the place, which is going to be a problem long term.
I think it's one of the most interesting intellectual things of my lifetime has been the number of people who were supposedly very smart and were certainly very wealthy, and I'm speaking particularly about Ted Turner and Warren Buffett, and the amount of money they have spent fighting the quote-unquote population bomb, when the whole problem the entire time it was falling birth rates, not an overpopulated Earth. But that's another hobby horse of mine that we can get to another time. I've got really 2 more questions for you. One is about insurance, and then the second one, I want to get to the financial implications of kicking the can down the road of the enormous debt load that we have in the U.S. economy. But specifically, I've been concerned, by the way, for the last 12 years or so, I have my main area of financial research focus has been property and casualty insurance companies. So I'm really familiar with the accounting and the float growth and the policies of P&C firms. But I have always really ignored life insurance companies because, well, every house doesn't burn down in a fire, but everybody dies. So I suspect that there's more alpha to be gained by underwriting in property and casualty than there is in life. But honestly, you may know more about it than I do. I just haven't ever gotten into life insurance. But it occurs to me that if you're anything like correct in the impact of disability and increased death, excess death, that the life insurance companies have the most exposure to those risks. And I just wonder, have you heard from any life insurance companies? Do you have any idea about which life insurer might be the most at risk? Or general, what's your feelings about the risks of excess death for life insurance companies?
So excess deaths first appeared in the group life part of their business. And to distinguish group life from whole life, group life are policies given to Fortune 500 mid-sized companies as a benefit. It's a blanket insurance policy. It's not underwritten. What that means is you don't go in for a medical exam, because it's a great business because young people don't die. So they figure out what the death rate is of someone of an age group that doesn't really die, and they charge and make good money. What happened in 21 and 22 was a disaster. They didn't see it coming, and they took losses. But group life is not as big as whole life. Whole life is where the big policies are, because the group life typically covers 1 or 2 times your base salary, which is not a lot of money for an insurance company. The whole life policies is where they write, $1 million to $20 million life insurance policies for very wealthy people. And the ones that were written before 2020, they haven't taken losses on those because it's Byzantine insurance accounting. Group life is priced every 1 to 3 years. So they took losses, then they raised prices. So they think it solved the problem in that group. Then in whole life, they have 5-year rolling long-term mortality assumptions, which they haven't changed yet because they keep thinking that excess mortality is going to normalize and that this was a one-time event. But eventually, if excess mortality continues to run 5 to 10%, they're going to have to write down a whole portion of the whole life business. And so my suspicion is that one of these insurance companies, I don't know which one, is going to give up the ghost, and then the others will follow suit. Swiss Re, a reinsurer, wrote a study, it came out about 6 months ago, where they said that they see excess mortality running 5 to 10% for at least the next 10 years.
Wow.
Now, if you read the fine print, they blame COVID. They blame COVID, and they say a solution to that is vaccine. So they're missing the boat. But at least their map confirms our map. We're not insurance guys. We're finance guys coming up with real-time excess mortality. They're projecting that it's going to stay high. That's what they do for a living. So Swiss Re agrees with us, but we don't agree on the cause.
Yeah. Okay. So I want to get to my last question, which is a financial question. And I may be the only person in America who remembers that the Smoot-Hawley tariff wasn't the tariff that blew up the world. The Smoot-Hawley tariff took average tariff rates from like 40% to 50% and expanded the number of items that were covered under the tariff. But the tariff regime that blew up the world actually was implemented in 1922. That's when the federal government, in an effort to protect farmers, implemented 40% tariffs across the board on just about every single agricultural product, and then some others as well. And that worked so well that the farmers had an enormous depression throughout the 1920s because, of course, everyone stopped buying our exported agricultural products. Meanwhile, every single country retaliated, which meant that everything that the farmers needed to grow food got more expensive. The U.S. Farm Bureau estimates that throughout the 1920s, American farmers lost $300 million a year because of those tariffs. And of course, they worked so well on the farmers that then in 1930, they expanded them to the rest of the economy. And just keep in mind, the 1920s should have been the golden era of American exports. We were making 4.5 million cars a year. Russia was making 1,000. Germany was making less than 20,000 by 1928. Europe had been destroyed by World War I. They were flat on their backs, and they could not compete with us in a manufacturing standpoint. Just like today, of course, nobody can compete with us in terms of technology. And so President Trump is determined he's going to take this incredible American vitality and he's going to slap a 25% tariff on it because everywhere it's worked, everywhere it's been implemented, it's failed. You know, it causes enormous economic dislocations. It destroys supply chains. It causes tremendous amounts of inflation. And I'm not going to bother with trying to explain all the economic reasons about comparative advantage, about specialization. Go read iPencil if you don't understand how economies work. But I know that you do. And I also know that you're very well aware that it's not really good for an economy to hold $35 trillion in federal debt. And even if you look at things like credit card debt, they're at really very large levels, high interest rates. And as inflation goes higher, the impact of those rates as they move up will have more and more of an economic impact. And the weight of all that eventually has to cause a recession and has to cause a credit cycle. And you and I both saw the same thing in the fall of 2019. And that we covered it up by having basically the equivalent of World War II, except for it was just in COVID vaccines and lots more debt. And now the president is saying sincerely that on February 1st, we're going to have a 25% across-the-board tariff with our two largest trading partners, which is Canada and Mexico. And I just wonder, how does that not kick off an incredible deflation? And how does that not wreck the economy? And what in the world are his advisors thinking?
Well, I'm of the opinion that this is Trump world where he's using his art of the deal. I don't think 25% will stick for very long, but he's got a whole host of problems beyond tariff games. Let's go back to 2022, 2023. We were in the spring of 23. We have early cycle indicators. We have a great economic model. My partner Carlos Allegri wrote a book, Economic Cycles, Debt and Demographics, and his models were predicting a recession at the end of 23, 24, as were a lot of other economists, never manifested. And we were wrong. So we were asking ourselves, have the laws of economic fundamentals changed, or is there something else going on? And we figured it out. Basically, Biden the last 2 years accelerated illegal immigration, which juiced the economy. That was a big part of the deficit spending, the NGOs. It was a logistical operation to bring in 10 to 15 million people. Net legal migration is 1 million a year. We've never seen anything like this. And there was unprecedented government spending.
Yeah, that's what I was going to point out. How can you have a nominal recession when the government deficit is almost 7% of GDP?
So it papered it over. It was a short-term fix. It was crisis level. We did that kind of deficit spending during the great financial crisis. What was the crisis this time? To get Biden reelected. So, Trump's policies are going to reverse all of this juice. So he doesn't even have to deport the illegals, but just halting it, second derivative, it's good. And the economy capacity, if you look at traditional measures of the economy, household survey, forget the establishment, household survey, PMI, capacity utilization, we're already in a recession. Although the headline numbers don't say that. The stock market hasn't discounted it yet. It will at some point. I have a theory that the stock market isn't what it used to be when you and I were doing it back in the day. it's 95% passive and algos. When I was managing money during the great financial crisis, it was 75% fundamental. So I think a discounting mechanism for the stock market is off. That's why we have super high valuations.
I'm sorry to interrupt, but I just want to confirm what you're saying, because obviously look at the concentration of the S&P index. And you understand that S&P is market weight. You understand it's driven by algos. And so the more that things get away from the fundamentals, the more overweight the top 10 positions in the S&P will be. And now I think we're at a point where 40% of the index is made up of 5 stocks, which is more concentration than we've ever seen before, which also means it's a bigger bubble than we've ever seen before.
Correct. And so when people say, "Oh, your call's wrong," I look at the stock market. I'm like, just wait. I'm not going to market time it. But when this cracks, and as you know, bubbles like this, that blow this big, when it cracks, it goes fast. It doesn't go slow. The dot-com bubble went down 50% over 2 years. The housing crisis, we had a huge 50% drawdown in 9 months. This one could be super fast, but let's put that aside for the moment.
Can I interrupt you just one more thing about that point? The other thing is that the larger the bubble blows, the longer the following bear market and duration will be as well. So if you look at Japan at the peak in 89, they were trading at 70 times earnings, and they went on to have a 20-year bear market. Their market didn't bottom until 09. Our market, of course, peaked in 2000, and then we had almost a 10-year bear market. It didn't bottom until 09 as well. And so I think that if you're looking at a CAPE ratio, the cyclically adjusted PE now of 37, the only time the stocks have ever been more expensive in the United States was at the tech bubble in 2000. And also, if you go back far enough, the railroad bubble in 1844. But in both of those cases, you had, essentially a decade-long bear market that followed. And you want to talk about what is not in anybody's forecast right now at all. Nobody sees what is black and white obvious to me and you, which is that these debt levels for corporations and for the federal government are not sustainable, and that any kind of economic slowdown is going to produce a really terrific debt cycle where there's going to be a whole lot of bad debt that gets written off. So crazy outside pitch here, and you can tell me, oh, forget about it, you're a crazy man. But is there any percentage chance that the U.S. defaults on some of its treasury obligations?
I don't think so. So the dollar system is so ingrained globally. Reserve currencies die slowly. So I think the Biden administration did a good job of trying to kill it. That's why the BRICS emerged so loud. The sanctions on Russia, the de-swifting them, and then actually stealing their money to fund the Ukraine war. That's why the BRICS have emerged, because I think these discussions had always been going on behind closed doors, but now they're just open about it. That's going to take time, because there's I think around 18 trillion in dollar-denominated bonds. So anybody who immediately would try to get off the dollar would have a deflationary depression in their own economy. So it's a slow process. 80%, I think 90% of all FX transactions still have the dollar on the other side. You look at what Warren Buffett is telling you something. He's got the biggest cash hoard he's ever had. Was he early? Sure. Was I early and Carlos early in our call for a sec? Yes. But, he's got 4% of the T-bill market, more than the Fed. And he's getting paid, 4.3%. He was getting paid 5.5% just to sit in cash and wait. He knows what's coming. And, it's taken longer to manifest the top and the actual, deflationary cycle. But I think U.S. T-bills and cash are still going to be fine. I would hide there. At some point, there's going to be a great trade in 10 years in long bonds, because everybody is so bearish long interest rates right now that we know when we do get this recession that actually manifests in headline numbers and the stock market wobbles, the long bond and the 10-year will go down as the Fed chases the crisis down. Real interest rates are around 2%, so money's tight. The Fed already took 100 off. They've already lowered interest rates 100 basis points. We think there's another 150 to 200 to go, and then they'll do their usual shenanigans, quantitative easing and nonsense.
Have you noticed that with the huge cash raise at Berkshire, that Berkshire is now trading at about 5 times its enterprise value? So the EV to EBITDA is about 5 right now at Berkshire stock, which is the cheapest I've ever seen it in my career.
Warren is gonna do what Warren does. He'll come in, at the bottom of all this, he will look, he's quiet right now. We'll be seeing the headlines. Warren Buffett is talking to Bank of America for preferred dividend, convertible, whatever, some deal where he gives billions and basically owns the company.
Well, listen, that's it for me. Aaron, you are the conspiracy theorist amongst us here. You've got your shot at Ed Dowd. What have you got for him?
I appreciate that. Yes, Ed, I am known as the conspiracy theorist at Porter & Company. However, there is no theory because it was created by the CIA, first of all. So that's just to make us look kooky. Second of all, as you are well aware, just wait 6 months. All conspiracy theories become conspiracy realism. And I don't want to go down a bunch of rabbit holes, but I do have a question for you, Ed. I know your background. You were with the evil force of BlackRock back in the day for a long time. I know that one of the things that you said that you got really good at was spotting liars, because you would meet with a lot of CEOs and you could see which ones were real and which ones were lying. So you kind of became a guy that's looking for signs, right? And now we see that with everybody. There's so many liars out there. And then, I also know your background where you had a little bit of a depression and were on some pharmaceuticals, and then you got really healthy and natural and cleaned out. And I think that's fantastic. I think we're seeing a lot of that in this world. And then you became very passionate about this process of enlightening people and going against the grain about the vaccines, and also about the idea that, as we've discussed today, where there just has to be constant crisis after crisis in order for this debt implosion to kind of be kicked down the road. Now that so many people have joined your side, now that there are so many different podcasts and influencers, and even X allows this discussion, what is your passion becoming now? Because there are a lot of quote unquote Ed Dowds out there for the vaccine side, not tying into finance. One time you had mentioned that you were really interested in starting a hedge fund and kind of helping people get into that hedge fund, understand how to protect and grow their wealth, because you see a system differently. What's your passion now? Because I can see somehow you got to be pivoting away from talking conspiracy stuff to something that you truly love.
Well, let's talk about conspiracy stuff. Conspiracies. Porter knows what I'm about to say. On Wall Street, we were always conspiracy theorists. Enron was a great company. You were a conspiracy theorist to think that it was a fraud. So I've sat in this world where investors would tell me I'm insane, I'm kooky. So I just applied that to the world. So the term conspiracy theorist makes me laugh. We're just early. That's all we are. We're Wall Street guys. You make money by being early and right and loud about it. And then when you're wrong, you have to admit it quickly and cut your losses. That's the game of Wall Street. So our passion now is, obviously, we've done a lot of work on the vaccine research. We've kind of slowed that down, and we continue to look for a seed investor for our hedge fund. We came close in the beginning of 24, but honestly, the individual wanted to steal the company, so we walked away. They weren't as passionate about our view of the world, so we're looking for a partner that kind of has the same view of the world and wants to do good, because we pledged in our pitch deck, whatever money we make, the partners have agreed to take 50% of our personal income and donate it to charities or something that does good in the world of projects. So we're not gonna, if the hedge fund is ever successful, we're not going to be own a bunch of boats.
Please don't do that. Please don't do that. The world does not need more charity. The world needs more venture capital. The world needs more good businesses. Oh
Well,
my God! Do you have any idea how much money Ted Turner has lit on fire by giving it to charity, or Warren Buffett?
I know that. I talked to people about there was an actual someone who made a lot of money and then spent 20 years giving to charities, and they realized how much money they burned.
All of
Maybe
it.
I misspoke. We're gonna invest in things that action change, and charities that exist to fix a problem but never really fix it. We know what that model is. We want to invest in things that are going to actually fix a problem, maybe make money fixing it.
I think what we should do is start a fund for homeless people who want to buy cigarettes. And we can donate all the money that we need to donate to be good people and to have tax write-offs. We can say that we give billions to charity, but at least the money will get used by people doing something that they enjoy, and then we can own Philip Morris and collect the dividends. I mean, that way it won't go to waste. By the way, I donated personally. I donated $250,000 in 2005 to a local charity here in Baltimore. Aaron, what was it called? Homes for Homeless People or something like that?
Yeah, something like that.
Homes for America. It's a big national charity, and I paid for one of the houses, and our employees went and did the demo and then helped do some of the carpentry and the landscaping and blah, blah, blah. And we gave a house to this local Baltimore family. And I went back to see what it looked like a year later. And that's the last time I ever gave a penny to a charity. If you give poor people a house, what will they do to it?
I absolutely agree. You need to be clever about how we incentivize people, and giving free stuff to people that didn't earn it. We know what that looks like. That's called the U.S. government welfare system.
Yeah,
and it doesn't work out so well.
No, and listen, I'm being a little facetious. I have, of course, given to other charities. I've given a lot of money to the Cystic Fibrosis Foundation, which has done great research on curing that disease. I give a lot of money every year to the local children's hospital. I'm basically the founding donor of Kevin Kisner's Children's Hospital in Aiken, South Carolina. I don't want people to hear me and think I'm being completely sincere. I just when I see someone as smart and talented as you, talking about combining an important business endeavor, which your hedge fund would bring a lot of value to a lot of investors and do a lot of good in the world and help allocate capital in a more rational way. And then just hearing that it hasn't happened because you've overlaid a charity mindset on top of it, I just think you're making a huge mistake. Go out and make as much money as you can and then do a good job giving away the wealth that you've earned as you see fit. And I'm sure if you do that, everyone will win.
Maybe I misspoke. It's not that the hedge fund would do it; it'd be our own personal profits. And so the hedge fund, it'd be the partner's profits, not the actual hedge fund. The hedge fund won't be giving money to any charity; it'd be our own personal decisions.
Very
good.
Well,
that's a little.
I would like to be an investor, so please keep me in the loop.
Yeah. No, and so we kind of shut down marketing of it because the uncertainty going into the election, no one was doing anything. Now we're seeing interest again. We're having more discussions, and we just launched this U.S. economic report that we're charging $1,000 for because it's for family offices, high net worth individuals, RIAs, asset managers. So this is not a report that's for the guy on Twitter. So we're charging. It's an 85-page report. It lays out how we think this is going to unfold. It's very, it's great insight into what we think is going to unfold. And we also provide an executive presentation and then a short video, an hour long, of Carlos and I going through the executive presentation. So
I don't need any of that. I already know you're a really good investor. But I'll tell you also, I'm launching a hedge fund as well, not to be competing with yours. I think probably have a very different approach, but I'm trying to implement a permanent portfolio strategy, which is something that I learned from Harry Brown in the mid-1990s. Just because I think probably as you do, there's going to be a large correction in financial asset prices, and I think that a fund that can make a 6 or 8% return with very low volatility is going to actually beat the market over the next 4 or 6 years. And by the way, let me tell you, that pitch interests no one. No one's getting excited about a hedge fund that's promising them 8% a year with no volatility. But that's what I want to do primarily with most of my money. But I would love to be an investor in your fund as well. So I'll have somebody follow up with you to get me some documents, and I'm happy to pledge and make a commitment for when you get started.
Yeah, that's great. I appreciate it. But the bottom line is we're passionate about starting a firm. We're going to continue the Humanity Project, which is the demographic research, the vaccine injury, because that's going to be important as we roll through economic cycles. This devastation is going to impact. It doesn't, you can't trade demographics, but you can certainly, assess out long-term trends.
Yeah,
So
and real fast, sorry to interrupt. One of the key points I think that you had talked about in previous podcasts was disability. It's one thing to look at the disability statistics go up, but you bring up a very good point. How many family members does that affect, right? Because it's not just a disabled person. Now you need people to take care of that person as well. Plus you've taken an income out of the household. I mean, that's something that compounds.
Yeah, it's a productivity issue for the economy. It's going to lower productivity in the economy for sure.
That's why the NATO round is a 5.56. It's not designed to kill; it's designed to maim, because a wounded soldier is harder on an army than a dead soldier. And the same concept is someone wounded by a vaccine. All the things that Aaron just said, and that Ed, I know you've researched. It's a very, very good point.
Lieutenant Colonel Teresa Long, who was one of the DMED whistleblowers, who's retiring soon, she and I had talked, and she said that this reminds her of like you said, the Vietnam War, where they wanted to injure the soldier rather than kill them, because that would logistically involve 5 other people and bog down the enemy. And she said this is exactly what this vaccine is doing. Even though everyone talks about the excess deaths, the amount of people who have been injured is the real problem. And she said, if this continues, we won't have a standing army in 5 years, because of recruitment issues, those who quit, who do want to take the vaccine, and all the disabled and those who are dying in the military.
Well, I certainly didn't want to end up with no military because of vaccine injuries or any injuries, but I believe America would be a much better place without a standing army, and I'm pretty sure all of our founding fathers wanted to prevent our country from ever having one. So maybe there's some silver lining.
I guess we have nuclear arsenals, so no one's going to attack us.
Right. We also have 300 million legal firearms in the United States, and probably 100 million avid hunters. We would be a very difficult country to conquer, kind of like Russia figured out when they tried to invade Ukraine.
Ed, I have one more comment before we let you go. And I know you were hot on this, and I've seen X blow up on this. I think, with getting Trump in, the one thing that patriots or Trump followers have hoped for, especially with RFK Jr., is to get to the bottom of this vaccine. He's still very proud and calls himself the father of Operation Warp Speed. And we've all been disappointed. So we're hoping that RFK comes in and evaluates this. I mean, they're still mandating it for newborns, for God's sakes. Like that's insane, right? I mean, that's the most insane thing ever. So, a couple days ago, and this will air in probably a week when we get it cut and released. It was Ellison on TV showing us that he's got this Stargate, and they want to do 500 billion into mRNA for cancers, which obviously, if you look at the data from the COVID shot, cancers have exploded. They call it turbo cancer, and it's everywhere. So it's problem, reaction, solution. So instead of Bill Gates this time, we've got another billionaire who is very well known for loving himself and not really loving humanity, pitching this idea of, hey, no problem. You just go to a doctor, you get diagnosed. We figure out and punch it into the AI, and we figure out what your vaccine cancer shot looks like, and we give it to you on site. And this is insane. This is literally insane. It was the second day of Trump's after inauguration, and this is what he rolls out. I would love your thoughts on that.
Okay, so I'm familiar with Larry Ellison. I was a software analyst before I went to BlackRock, and when I was at BlackRock as a portfolio manager, I was the software analyst. Larry Ellison is a consummate salesman. He built his business. He didn't have the best technology. He was the best salesman. He would do constantly what we call slideware. His competitor would come up with a product. He would then say, we have it and it's better, but it was all slides. and then they would tell his engineers go write the code.
Slideware.
So, yeah. So Larry Ellison gets up there, and first of all, your audience needs to know this. Stargate was started last year. It was they've already broken ground. They got permitting. They have 10 data centers, and then they said we couldn't have done this without you, Mr. President Trump. So that was a big oligarch kiss the ring applied to his ego. And of the $100 billion they supposedly committed last year, that's not fully funded because OpenAI has no money. SoftBank has cash flow problems, so that it's all smoke and mirrors. They may announce another $400 billion of private investment. That was just classic Larry Ellison, Sam Altman tech hype nonsense. And then Larry gets out there and says, "We're gonna with them." He hasn't read the room. He lives in a bubble. He probably hasn't. The guy bought it, and he talks about mRNA and individualized cancer vaccines. That is just so far in the realm of fantasy that it's beyond the pale. So that was an absurd, just PR stunt. Susie Wiles, the chief of staff, probably didn't know what Larry just said what Larry is going to say. So I'm very hopeful that this was just a one-time turf error on their part. Makes Trump look like we'll see what Trump's going to do with mRNA, but that was the most ridiculous thing I've seen in a long time.
I love it, Ed. You're the first guest who used the word redonkulous, which is one of my favorites. So
that is one of your favorites.
So listen, I had such a great time talking to you. I really did. You're I think my favorite guest we've ever had. I loved watching you when you would do appearances. I can't remember if I saw them in X or I saw them actually on cable television, but I just loved how you always remained completely calm. You never reacted emotionally to any of this crazy propaganda that was going on all around you. You were like the calm in the storm. And I think you and I both know that is the single most important hallmark of any talented investor. You always are calm. You're never emotional. So anyways, just thank you so much for coming on. It was brilliant getting to talk with you. And I hope that we can check in with you again in time when some of these economic risks materialize. We can have you back on for a couple minutes and just talk about where things are going, because I think you and I see the world in remarkably similar ways.
Yeah, I think as we roll through the year, let's get back on here and discuss what's appearing that justifies our predictions in our report. I think the cracks are gonna start appearing between now and March. And then by the fall, it should be apparent to everybody. And you know how this works, Porter. We've issued the report. Sales are going well, but they'll explode when it's too late, when people want to find out what just happened. That's how this works.
Tell me about it. I'm in the publishing world, and I basically have to tell people what they want to hear and then gently try to change their minds in the editorial to get them, away from the bubble that I've already just sold them. But, the people at The Economist magazine are not dumb, but they just have to sell magazines. And so that's where all those covers come from, and the people who are writing them, like, yeah, I know it's ridiculous, but that's the best-selling magazine we did all year. So it's tough that way. It's tough dealing with the realities of the financial businesses and in financial publishing when you know that to be successful in the market, you have to be a contrarian. But it's very hard to be a contrarian if you're popular.
Exactly. But we're being contrarian, and this thing will sell once we're right, but it'll be too late.
Yeah, that's right. Well, listen, Ed, great talking with you. Thanks so much for your time today. I really appreciate it.
Thank you, Porter. Thank you, Aaron. Great to be here.
We appreciate it so much. All right, Porter, I'd love to get your thoughts on Ed Dowd. Sound like you guys have very similar financial minds, big themes. It's really uncanny to me to put you with somebody and you guys are almost saying the same thing.
I never read his memo. I know it's a famous thing. It was on Twitter. I just never saw it. But it would be really cool to go back and compare what I wrote. I think I wrote mine in April. I think it was April 20th, 2020, and see what he wrote, because we both came to the exact same conclusion, and I'm sure we were using similar data sets to judge that. And I would just say, I think the hallmark of both of us is that we don't let the media or anyone else do our thinking. I'll read the headline, and then I'm like, I wonder what the data says, or I wonder what the real facts are. And I wonder how many of the listeners can relate to this. anytime in my entire life I've ever had first-person knowledge of some event, and then I saw what the media wrote about it, it's laughable how incredibly wrong it always is. Like, it's whatever their version of the event was, it was nothing like actually being there whatsoever. And I just think that, I guess at some point in your life, you're like, I read things all the time. I'm like, I wonder what really happened. And then when it comes to COVID, I thought it was very important that we get the facts. And I thought it was funny how many smart people that I otherwise respect that just completely abandon their own thinking in that moment. They're just like, oh, well, the government said and it's for the health, so it must be, we have to do it. And I'm like, that's just amazing. It didn't take very much to convince everybody in America to lose their fucking minds.
I mean, it was basically the world other than Africa, because Africa had been experimented on by Bill Gates for so long, they just weren't having it. They literally are like, we're not doing any of that shot stuff. But other than that, it was fascinating to watch from Colombia, Porter, because I just never realized how people are so scared, because that's what it is, right? It was fear. And it just really blew me away to watch neighbor turn on neighbor for the silliest little things out there. But what a great psyop. I mean, wow. Whoever constructed that thing, they did a good job.
They know what they're doing. It was a great interview. I'm so pleased to talk with Ed, and it was a great podcast. I hope everybody liked it. Thanks for putting that together. I have one last thing before we go, which is, have you seen the equity markets in Colombia? Speaking of Colombia, they're blowing up.
Yeah, yes, they are.
And,
they really are.
And I think we should get somebody who really knows that market locally to come and talk about the best companies in Colombia and the opportunities for investors, because I think Colombia is probably going to be one of the best performing markets in the world this year.
Yeah, what's even here's what's even more amazing about that, Porter, is we are still under the control of the only liberal president that's ever been elected, Petro. And Petro is not good for business at all.
No, but he's definitely on the way out.
He's 100% on the way out. We had gubernatorial and mayoral elections, and it went so extreme conservative, he didn't get one single person that he recommended in the entire country in, and everybody went against him, and it's being celebrated. So imagine if we could get somebody in that knows what they're doing, and as strong as equities are looking, in 2026, August of 2026, there will be a new president. And Latin America goes the way of Latin America for the most part. So with Milei and Bukele, and the Colombians are basically crying out saying we need one of those or a combination of those guys to come in.
More law and order, and we need less taxes.
Wow, imagine that.
Yeah, that'd be nice, wouldn't it? Well, listen, man, it was a great podcast. Thanks again for putting it together. And enjoy being away from Baltimore. I know you guys are going to be playing Sawgrass this weekend. I'm a little jelly.
We are, but here's the thing. I don't even think you would come out for this, because it's going to be a high of 50. Right now, Porter, I'm in Jacksonville. I got in my car this morning. It was 33. It might be 38 outside.
Did Jacksonville get snow this week?
It didn't get snow, but the peninsula got crushed. So that left side, right over there by Alabama and Louisiana, got absolutely decimated with snow. But
I saw we're 10 inches of snow in Pensacola or something like that.
It's Pensacola.
That's global warming. It's global warming for you.
And also, let me just give the podcast feedback at porterandcompanyresearch.com. Podcast feedback at porterandcompanyresearch.com. Please let us know what you thought of the interview.
Yep, we'd love to hear from you. And thanks for listening.
Thank you for listening to the Porter & Company Black Label Podcast with your hosts, Porter Stansberry and Aaron Brabham. We'll see you soon.